All right, good morning, good morning. Welcome to Market Pulse. My name is Jimmy Mbogo, our very first episode of 2025. And of course, as the year begins, we are all looking for areas to invest and what aspects of investment should we put our money in 2025. Now, I'm at the Nairobi Securities Exchange. Help me with this conversation, looking at the different counters, looking at the areas of great potential. And I'm here to speak with Frank Mwiti, the CEO of the Nairobi Securities Exchange. Frank, thanks so much for making time to speak to us. Let's take a few steps back.
Sure.
In 2023, one of the biggest headlines that was out there about the Nairobi Securities Exchange is that it was one of the worst performing in the world. Towards the end of 2024, we saw that change to becoming one of the best performing exchanges on the continent. And I just want to know what changed, what happened, how did we move from the worst performing to one of the best performing in the continent?
Yeah. Thank you, and glad to be here. You're right that 2024 has been a stunning year for us. It's been fantastically, it's been a fantastic year in terms of market performance. You're right, the year before in 2023 was not really the best year for us. I joined the NSE last year, and our focus has really been primarily on engaging the market to ensure that we are responsive to the market and that we are addressing issues that hinder market performance, so that then the market operates with little friction and, more importantly, delivers good returns for our participants. The year has been 2024 was fantastic. For example, you're right, we were top performer in Africa by the MSCI index, the Morgan Stanley benchmark. We were up 65% in dollar terms, so that's you really cannot get better than that.
Yeah.
We're the top exchange across the continent, beating the others by a far margin. I mean, the second to that was about 30%. So we really, there was no double, one would say there's no second best there. I think the rest are number 10 going down. Mm-hmm. So that 2024 was a good year. Our listed equities, in terms of market capitalization, also went up. We were up 36% from 1.4 trillion shillings to 1.9 trillion shillings. So that went that was fantastic for our investors, which also, of course, resonates with the increases in the various indices at the NSE. So, for example, the All Share Index was up 34%. Same with the NSE 20 index was also up 34%, and the NSE 10 was up 44%. Mm-hmm. So the market performance has been fantastic. Yeah. To consolidate that, it's the first time since 2019 where we saw foreign inflows as net positive. So foreign investors coming into our market, more or less throughout 2024. And that also went then to build on the successful performance of the NSE in 2024, okay. And of course the positive returns that our investors have harvested on the back of that fantastic performance.
All right, so looking at 2025, and of course the first thing that comes to mind is there's a lot of geopolitical aspects that have changed. Of course, now Donald Trump is back at the White House. And of course, the market are going to react to that. So are we likely to see capital flight, or are we likely to see capital inflows into the country? Okay.
So I think the first thing to say is the new administration in the US, led by Donald Trump, is very market friendly. And I think that tends to be the case most of the time when you have a Republican administration.
Yeah.
And you can see the market actually anticipating very positive policy direction from the changes in the US, that are going to then translate into better market performance, including on our own. Mm-hmm. Towards the end of let's say late 2023 and more or less most of 2024, we saw some interest rate hikes by the US government.
Yeah.
And that then translated into capital flowing out from emerging markets and frontier markets to more developed markets, given the higher returns that they were seeing there. But then towards the end of 2024, and we expect the case the same to be in 2025, interest rates are coming down.
Yeah.
And what that then means is that more foreign capital would be looking for yield in both emerging and frontier markets. And so we, as a frontier market, should benefit from increased foreign flows. Secondly, we are seeing generally around the world things like inflation, metrics like inflation coming down. And that also should then translate into more disposable income and therefore more either higher savings or more investment in various markets, including ours. So we would benefit from that. Closer home here, we are seeing the central bank pushing to have lower and lower interest rates. And we think as that monetary policy transmits across the economy, again, you will see a more buoyant economy. And as we always know, a more buoyant economy means either our listed companies are doing much better, they are announcing dividends, they are posting higher profits, as well as, of course, investors themselves looking to participate in that upside as the economy grows. So by and large for 2025, we expect very positive growth, and that growth to then transmit into better investment opportunities at the NSE.
All right, so one of the things that, again, we have seen as a trend here in Kenya, we have the bond market outperforming the equity market. And the question that comes to mind is what needs to be done, whether from a policy perspective or from an activation perspective, to try and attract more investors, whether retail or institutional investors, back to the market, particularly in the equities market. Okay,
good point. It's a good point. You know, maybe I should start by saying that the bonds market at the NSE for 2024 was also very, very good. We were up 133%. The volumes were from 643 billion the previous year in 2023 to 1.5 trillion this year. So up 133%. So we saw a huge upswing on the bond side. Now, it is true that the yield on government paper, treasury bonds, treasury bills has been really good, or rather quite high. And the government has been paying, the upper teens. And so, of course, any investor, whether retail or institutional, would, of course, chase that yield. But we are seeing that coming down now. There is every anticipation in the market that those yields will continue to come down. As yields on the bonds side starts to come down, more capital is now then moving to equities. If things were normal, and I say that in a guarded way, but if things were normal, you cannot be making more money in the bonds market than in the equities market. Okay. However, where we are now is that until the government paper pays lower and lower rates, there will be less capital allocated to equities. But what I'm trying to say is that now that we are seeing yields coming down on the government paper, equities are going to benefit more. Companies, listed companies, by and large, are posting really good profits, are declaring good dividends, and of course, equities also benefits from capital gains. So we think that there's huge opportunities to be had buying shares, investing in equities, and this is the time, I think, to do that before the market, of course, gets better and better.
All right. Another trend that we have observed over the years, particularly here at the NSE, is when you look at the 20-share index and the 10-share index, there are these specific counters, and we're talking about the counters such as Safaricom and of course those in the banking sectors that seem to be performing pretty well. Yet we have a couple of counters that have been pretty dormant for some time. And what needs to happen, Frank, to make sure that even those so-called dormant or perceived to be dormant counters then become active and attract investors?
Okay, so you're right that we have more some of the counters that are super active. I mean, we have fewer counters that are super active compared to the rest of the market. But there are three things to point out. Number one, there are those counters that are suspended, where we are working very hard to normalize that. Kenya Airways is a good example that has come back to market, is performing fantastically well, and it's actually one of the top performers as of this year anyway.
Yeah.
And so the point is, there is a category of accounts that are suspended that we need to normalize and then get them back in the market. And we're working very closely with the Capital Markets Authority, CMA, and of course the listed entities themselves to work on that. So you will see more of that happening this year, so that we can have more of those accounts available for trading. You also have a category of listed entities that are very closely held, and so as much as there is demand to let's say you want to buy, they are not sellers because the shares are so closely held, and therefore the trading doesn't happen. Now, some of those, there are those where we're in discussions to potentially suggest things like splitting shares or other capital market offerings to bring more liquidity to those counters. And then there's a last category where it is a lack of engagement with the market. And so accounts, those counters are dormant simply because the issuers, the listed companies, have not taken time, sometimes even bothered, to engage with the market, either giving them updates on how the businesses are doing, providing more robust market data, having more frequent investor briefings, engaging with the fund managers and investors, so that then you can provide more information to potential investors or existing shareholders, so that then they can trade. Now, so the point is, we are having different approaches depending on what the root cause is, to bring more life to, shall I say, to these counters. And you will see that happening a lot more this year, because that is actually part and parcel of our new strategy for 2025-2029.
All right, and just speaking about new strategies for 2025-2029, the question that comes in is, what does this new strategy entail?
Okay.
Because after one good year, of course, a lot of investors would be hoping that then that becomes the norm. Okay.
So let's start off with what the new strategy is about. Okay. There are three things that are at the core of our new strategy for 2025-2029. The first one is revitalizing the markets. Our markets have been a bit moribund, and especially 2023 backwards, and we want to change that, and I'll come back to how we intend to do that. The second bit is we want to leverage technology to enable access to the market, and to democratize access to our market. Think mobile trading as an example. Think how you consume market data. Think how you get recommendations on what to buy or sell. Think how you get corporate actions, like companies that are announcing dividends, that are announcing bonus shares, that are announcing rights issues, that are announcing new strategies, etc. You need all that information to be able to make good informed decisions and to engage with the market. Now, we need to leverage technology to make that happen, so that everyone across the country and even outside can be able to access our markets without a lot of friction. So that's on the technology. Then internally as NSE, we do want to be more organizationally effective. And that means, for example, making sure that our processes are more streamlined and efficient. When you engage with us, we are very responsive, and we don't take too long to resolve issues and to take feedback and act on it. And also how we put out other initiatives like investor education, financial literacy, etc. Now, coming back to revitalizing our markets. So coming back to revitalizing our markets, which is a key pillar in our new strategy. The tip of the spear for that particular pillar is we want to bring back our retail investors, whether those are domestic or diaspora. We need our market to be primarily driven by retail investors, okay? In order for that to happen, we need to, of course, drive market awareness and investor awareness and investor education and financial literacy. Yeah. But we also want to take the market to the people. And I don't mean that in a political way. I mean that NSE will be known in the deepest of market in our or village in our country. Yeah. Either doing that through engagements such as this, TV, radio, social media, through our agency network that we are going to establish, or through working with the other capital markets partners like stockbrokers and fund managers, working with aggregators like banks and SACCOs and chamas and things like this. Retail investors have actually been the core of most markets that are successful anywhere in the world. Yeah. Think US, think India. And so, and it is not for lack of liquidity in our country. If you think about the amount of capital, the amount of liquidity, for example, money that goes into SACCOs, that goes into buying plots of land, that goes into gambling, that goes into collective investment schemes, chamas and all these things. We don't have a problem with liquidity. It's out to channel that into the market. So this will be a key push for us, including coming up with products that enable retail investors to participate in our market without a lot of difficulty and technical requirements. For example, we intend to go big on exchange traded funds, ETFs, because these are collective vehicles that give passive access to the market without a lot of difficulty and without a need for technical knowledge of the market. We want to bring, for example, things like indices. We want to bring, we are working with the CME around digital assets. We want to bring things like global depository receipts so that you can buy Microsoft shares on our exchange, as an example. The point is that retail investors are going to be at the core of our new strategy to revitalize our markets, and we'll do that by being out in the market, by engaging with other players, by bringing out the right products and working with the technology to make that happen.
All right, and of course, even as you plan to go out and attract more retail investors, the question that comes to mind is, of the listed companies that are already in the market, are we likely to have more, or are we bringing all these investors to this specific pool, yet the investment options are limited? Okay,
so it's a two-pronged approach. First of all, let me start by saying investment options are not limited as is. We have more than 60 companies that you can list in, over and above other listed instruments, you know, like ETFs, as I said. We have REITs and all these things. So for the savvy investors, actually there is enough to work with. Okay, there is enough to work with. Okay, so the first bit is, can we mobilize investors to come to our market and work with what we have as we work on the second prong, which is bringing in more listings, more IPOs, more funds, more structured products. Okay, so it's both. Okay, surprisingly, and I don't say this in a bad way, but foreign investors are making a killing in our market, while some of our domestic investors are still waiting for IPOs. I mean, there is companies on our listed boards that have made fantastic returns this year. Entities that are up 30%. Okay, in terms of some of them are more than that. HF doing fantastic work. KQ doing very well. So there is one argument, as you say, which is, what else are you going to issue versus, my friend, have you even harvested the profits that are there to be harvested alongside other investors with what we already have? Okay, so I think there's a saying, you lose 9 chasing 10. Okay, engage with the market as we sit while we bring other products.
All right, so just moving forward into 2025, and of course, I'm sure even for these retail investors, they'll be looking at which segments should I be investing in, which counters should I be looking at? Should I be looking at the insurance counters? Should I be looking at the banking counters? Should I be looking at the agriculture counter? So from where you sit, what would be the areas that they really need to look out for going into 2025 and making those investment decisions?
I think, to be fair, seeing what the government is doing in terms of policy and a lot of the other initiatives to get our economy growing even better, actually just about every sector will benefit from 2025. Okay, it is true, I think some of the sectors might be more might benefit more than others. For example, the services sectors. However, my suggestion would be that for any investor out there, work with your broker to understand the market, to unpack market research, to understand the single names themselves, not just the sector, but the names that are in those sectors. To see what these companies themselves are saying in terms of their plans for 2025, and use that as a basis to decide what you want to invest in. And because I think it would be unfair for me to highlight some names and not others. And as a first line regulator, I also need to be objective and independent. But the point to make it is that the savvy investors work with their brokers. They look at research. They look at the companies themselves and make investment decisions in an informed way. Going forward, we will be able to enable investors to buy the market. By that I mean, you don't. If for example, you introduce ability to trade indices. Let's say you can buy the NSE All Share Index. That means you buy the index, and that means you have exposure to the entire market. You don't have to say, oh, I will buy this name or that name. When we introduce things like exchange traded funds, ETFs, again, that will be also an opportunity to buy an entire market, or to buy a sector, or to buy a basket. Okay, but the point I'm making it is, savvy investors out there, please, the way to do it is to work with your broker, do the research. Keep an eye on what the information the companies are putting out there. Engage with these companies through their investor relations teams, their social media handles, their AGMs, and that then will give you the right information to make an informed decision. All
right. So, Frank, in closing, last year one of the things that we saw is a lot of volatility, particularly in the FX market. We don't have that challenge this year. So, what are some of the headwinds that you foresee this year? And something that you've also mentioned is the fact that the Fed is expected to cut rates. Our very own central bank is expected to cut rates. So looking forward, what is the impact of that?
Okay. So I think at the heart of 2025 will be matters policy. So the certainty around policy, the policy direction. What is our direction of travel as far as policy is concerned? You know, whether it is monetary policy, fiscal policy, etc. So this will be a key point. And for us, we are, of course, staying close to, for example, the National Treasury and other government entities, so that we can glean the direction of travel as far as policy is concerned, and we then translate that to information for the market. We spend a lot of time engaging with fund managers, with investment managers, asset managers, etc., and especially the global ones. They are really keen to understand, to get clarity around policy. So that will continue to be a key point. The other key point, of course, is the nature of our political environment. That's important because markets like ours are highly impacted by political decisions, political discourse, and other aspects to do with the management of the country. So to the extent that we don't have too volatile political environment in 2025,
yeah.
Kenya is headed in fantastic places, and I'm very confident, especially under given our new strategy, that this is going to be a very fantastic year for us. And in conclusion, I should say, you saw as the macroeconomic environment improved and policy environment improved,
yeah.
you could even see that translating, for example, into more companies from listed on the NSE being included in the MSCI index. We now have 12, yeah. 5 in the main index and 7 in the small caps index. We expect more of those to also be included this year. So 2025, fantastic year. This is the time to buy.
All right, a very bullish outlook from you, Frank, and of course, thank you for making time to speak to us. And that's how we wrap up this very first episode of Market Pulse in 2025. A very bullish year from the Nairobi Securities Exchange. Will you invest? That's all the time we have for you. My name is Jimmy Mbogo. Let's do this again, same time, same place next week.